Should you trade yield max funds? Well, there's pros and cons to trading these funds, but should you? I don't know. It's up to you. But let's talk about it. This is Mike, the tactical stock scalper. All right. So this is a fun topic, and me being a trader by nature, I can't wait to talk about it. So, should you trade them? Well, there's pros and cons, and let's talk about 3 different types of trading we're going to cover today. We're going to talk about scalping, day trading, and swing trading, yield max and defiance funds and other high yield funds. So, you don't just have to buy and hold these funds. Now, you will hear that a lot from people that, these are designed. I just did air quotation. Sorry about that. These are designed to buy and hold. And maybe that's, what Yield Max wants you to do, but you can absolutely trade them. And they can give you a huge advantage over trading regular stocks. So let's start here with scalping. What is scalping? Scalping is looking for quick movements like 10 to 20 to 30 cents on a particular stock and then getting out, right? You're getting in. Now, the premise of scalping is to go in with a large amount of shares or options, depending, and then catching a quick movement and then getting out, right? And scalping for me has been very, very productive, but I haven't scalped yield max funds. But I know someone who has, Tara Slayer. You will see him in Retire on Dividends Discord, Kamir's Discord, and my Discord. And he scalps these funds and has been really successful at doing it. So can you scalp the funds? Absolutely. Tara is living proof that you can scalp them. So, that's up to you and how you want to do your trading strategy. Okay. Let's talk about day trading. Now, I have some notes here that I may refer to from time to time. Day trading is, essentially you buy a stock in the morning and you hold it all day and try to sell it by market close or after market close, right? Day trading is what it is. You're holding it for a day. Now, a couple pros and cons here. The first con is the yield max fund or defiance, whatever, they are capped by a covered call, right? So unlike a normal stock that can go up to infinity, right? These can't because they're capped. So you have to realize that if you're going to day trade yield max or defiance funds, you should probably know where the covered call is on the underlying, so you know where you are capped at, right? So that can really help you and hurt you. How can it hurt you? Well, if you're buying up close to where the fund is capped, you can't go any higher. So that could really mess with your risk reward, right? Because you can catch all the downside of yield max funds and defiance, but the upside is limited by the covered call, right? So if you're getting close to that covered call, trying to get in and day trade that could be a really dangerous proposition because you're only catching the downside and your upside is limited. So it's very important, if you're going to day trade these, to know where the covered call is on the underlying and make sure that your risk reward is there. Now, there's also a benefit to having the call capped. You know how much you can make maximum with it going up, where it's going to be capped. So if you can buy it, and a cap is way up there, then that's great. You got a lot of room to run, and you could sell it as high as it can go. You can literally sell your fund if you're day trading it at the peak, depending on a covered call, of course. So that is great, right? That's wonderful. So your risk reward is already set for you. You don't have to say, well, what if it goes up here? What if it goes? It's already set. You know the maximum you can make, and that could really help set your risk reward when you're day trading. I have a Discord server. I'll leave a link in the description if you'd like to talk about trading or anything else. Now let's go to my favorite way. And I think this is where I think trading yield max and high yield dividend funds is really beneficial. And this is swing trading. What is swing trading? Well, swing trading is anything you're holding longer than a day, 2 days up to a month, 2 months, whatever, right? This is great for yield max funds, and I think maybe even better than swing trading normal stocks. Again, let's talk about the negative first, right? You have a covered call, and it is capped. So you know it's not going to go up as high as a normal stock. But as with any kind of investing, whether it's particularly trading, you want to know your downside risk. Well, here's a huge benefit to swing trading these. And I'll give some examples of swing trades I've done with these. If you get in and it starts declining, you don't have to use a stop loss, right? Like you would with any other kind of trading. This is not financial advice. I'm not telling you what to do with your money or anything like that. I'm just pointing this out in the way that I do it, me personally. You don't have to have a stop loss in place. Why? Because if it goes down, you're still getting a dividend, unlike many, many stocks that you may trade. So let's say you get in and it starts dumping on you. Well, instead of triggering a stop loss, you could just let it ride. And now you're in the buy and hold, right? That these are designed for, so to speak. So now you're in a buy and hold. It's okay. Now you're just transferred from a swing trade to a buy and hold. But even if you try to swing trade these for a couple, 3 months, even if it drops in a normal stock, you're still going to hold it. You're going to DCA down, get your average price down in hopes that the stock goes back up. That is no different. Here, you're doing the same exact thing. The only difference is you're getting a dividend while you hold your swing trade. That's pretty phenomenal, okay? And a good dividend. Now, all of them, I think, have great dividends across the board, right? More so than many, many stocks do. Got my notes here. Let me look at this. Now, the upside to this, and I'm going to give you some examples of stuff I've done. AMZY. I swing traded that, and it wasn't on purpose to swing trade it. I was going to buy and hold it, but it went up so much that I had dividends for a couple months. The share price was way up, so I sold it. So I swing traded it. And then what I did with that is I took all that money and got into APLY, Appley, right? And did the same exact thing. I was able to buy Appley really low, and then it went up for a couple months, and I was able to collect dividends and share price appreciation, right? I did the same thing with Tesla here recently. I just did a video about how I got out of Tesla, and I swing traded that basically. I just averaged down for a couple months, collected dividends, it got above my average price, and I sold it, right? So these are great examples of what I've done to swing trade these. And I really do think that there is an option for someone who wants to trade and trade really safely by swing trading these funds. And I know a lot of people who have done this. I don't want to mention their names because I didn't ask them for permission, but you can see it all around different social media platforms of people that have swing traded these funds with great success. So give you something to think about. If you want to trade these funds, can you do it? Absolutely. Is it feasible? Does it work? Yes, absolutely. Hope you enjoyed the content. Caress the like button. If you like it, maybe consider subscribing to the channel. This is Mike, the Tactical Stock Scalper.